Hey, we want to thank Bill.com for being a sponsor of the Thrivecast. Our firm, Blummer CPAs, has used Bill.com as a foundational part of our tech stack for many, many years. We're a virtual firm and we work with clients virtually all over the US. And so we have to have a virtual platform like Bill.com. So thank you, Bill.com, for sponsoring the Thrivecast. Hey, everybody. Jason Blummer here. Welcome to another episode of the Thrivecast. We're excited for you to show up. One thing I want to mention in Thriveal is starting July 2022 all the way through January 2023, we start our programs called Foundations and Scaling Programs. These are 90-minute monthly mastermind groups where we take you through our prototype components model for growth. So these are open to the whole accounting, firm entrepreneurial profession. So we want to invite you to join us. And you can hit Thriveal.com and then go to programs and find out more. And my partner and I are going to both be teaching those. So we're excited about our programs kicking off. So join us. And I'm also excited about the guest we have. This is the third show out of a 4-show period. So this is really cool. And Sonia Dumas is as you already know, is a cryptocurrency educator, investor for accountants, and she wants people to understand the risks and opportunities for cryptocurrency, not only for y'all, but for her own research and her own crypto investment. And she is a chief editor at Alt Money, subject matter expert. You already know she knows a lot about this craziness called crypto and just all kind of yield generations. I mean, she feeds the market with this stuff. So connect with Sonia on LinkedIn and we'll link her up. So Sonia, thanks for joining us on the show again. It's so fun to have you every time you come. So
Jason, it's a pleasure to be back.
Very cool. So, and I just like to tell people it's Alt Money. It's ALTMONIE.com. That's where you publish a lot of your research about crypto. And that's some nerdy stuff. So you got to get through that stuff. But I mean, you have some deep related research. I don't know where you get it, but I want to ask you, like, what is crypto going to be doing now? Can you give us a little bit of insight into crypto for the rest of the year? Like, your research lets you do that?
You want the forecast.
I want the forecast, Sonia. Everybody wants it.
You want the
Everybody
forecast.
wants it.
I know, right? Everyone wants, right. You want to be on the right side of the trend. And so right now, the data, and I always like to say the data, so this is not my opinion. This is more about over 70 different metrics that we utilize on-chain and off-chain to be able to track crypto's price. So the days of like old school PE ratios and quarterly stock earning reports, that doesn't apply to crypto. And so one of the things that the data is showing us is that one, specifically Bitcoin, it's been achieving higher lows since January 24th. And so there's this slow but real painful uptick that's been happening. And if you have paid attention, or basically if you bought the low back in January, you would be up on your Bitcoin portfolio anywhere from 14 to 45%, depending on what your trading strategy was. And so one of the things that we're seeing is that the bull is slowly waking up. It's not as fast and ferocious as we like it to be in crypto.
That's right.
We love the volatility.
I know.
And unfortunately, it's just kind of it's lethargic. It's a really lethargic bull, essentially. But what we are seeing is that we are expecting an uptrend over probably the next 60 days, but it's most likely going to be short-lived because the data is also showing a multi-month downtrend. So whatever the new high that Bitcoin will reach, and that also includes the altcoins, whatever the new high is within the next basically 2 months. After that, we expect a multi-month downtrend, which will be painful and brutal, especially if you're leverage trading. And then from there, we'll see what the data shows at that point. But that's about the time frame. At Alt Money, we update every week because this really does change every week. And we show pretty much a monthly forecast. And then we hold ourselves accountable to say, here's what the forecast is for the month. Did the price actually do that? And so far, we've been on the right side of the trend for a while.
Wow. Very cool. It never struck me, but it makes sense that the stock market is really tied to earnings of companies that we're actually trading. Crypto is not that at all. We're not trading companies' earnings at all and their stock. So what are we trading? Nothing, right? It's just the coin going up and down. I mean, it's the market's interest in it, I guess, right?
It's the market's interest. You're trading the potential innovation for the coin. You're trading what they're doing. You're trading hype, right? Some of it's you're trading trends.
Yeah.
So it really depends on the coin. Like Ethereum is really, like if you look at Ethereum, you look at Bitcoin, those have more of a serious use case than say an NFT that, looks like, a dog, an animal, a hot dog, whatever you want to call it, right? Food, fruit, like some weird looking animal.
Right.
That's just specifically, that's trend trading. Essentially, you have to know when to get in, when to get out. That's flipping. No different than real estate flipping, right? At some point back in 2008, like there were, let's just say houses in undesirable areas that were being flipped for like $1 million. And it's like, who would buy that? Somebody did in 2008.
Wow. That is
Somebody
crazy.
did.
Yeah. Well, do you have a favorite coin? Because as I've studied the coin, because I want to do some investing in crypto, Ethereum is one I really lean towards. There's a lot. I mean, they have a lot of data out there. You can read a lot about them. Seems the founder knows what he's talking about. I don't know.
I know.
But what's his name? Vital? I don't know. How do you even say
Vitalik?
that?
Yeah,
Vitalik. Yeah.
I know some of us call him vitamin butane because his mind is on a whole nother level.
Yeah, I heard him on a podcast, and I'm like, I don't even know what that guy is talking about. I mean, he nerds out on this stuff. Do you have a favorite coin, or is it? Do you not?
I wouldn't say a favorite coin as much as I have a preferred sector of crypto that I'm paying attention to, because this is really about the evolution of the internet, right? We went from Web 1 or Web 0, Web 1, Web 2. Now we're moving to Web 3. And so I say go back to, circa 1999, 2000.
Wow. Yeah.
And you look at all the .com companies that were being created. And at the end of the day, companies like Amazon and Google, Facebook, Microsoft, Intel, Adobe, they figured something out about the cloud. They basically positioned themselves as infrastructure, mission critical software companies that any of those companies go down, what do you think is going to happen to businesses, right?
Yep.
So many of us are dependent upon those networks. And so I use that same lens when it comes to cryptocurrencies. Who's building out mission critical infrastructure or applications and platforms that other companies will need as an integral part of their business? And so, I'm going to name off a few coins, not investment advice, definitely for you to go research. But some of the ones that I do, Bitcoin and Ethereum at the top because they've been around the longest, and they also attract the most money for now. There is companies like Chainlink. Chainlink is doing something, they're basically what's called chain agnostic. They don't care what blockchain you have. But what they do is they take off-chain data, like think about insurance information or the title deed to your house, or just identity information, and they bring it on-chain, or they allow the information to be communicated on-chain so that way smart contracts can do their functioning. So at the end of the day, when you look at most projects that are looking to bring offline data or off-chain data on-chain, what you'll see is that they default to Chainlink. There's a reason for that. I also like a company called The Graph. The Graph is doing something that when I read their information, I was like, oh, this is fascinating.
Nice.
So Google has indexed, right, the whole internet, right? That's what Google does.
That's
and
right.
what do they do with what do they do with that data? They have monetized that data to the tune of billions, right?
To the billions, a lot of money.
To the tune of billions, right? Probably trillions, and we just don't know about it.
That's right.
At the end of the day, there's a protocol or a project called The Graph, and they are deciding to index the entire blockchain ecosystem, whether it's Bitcoin, Ethereum, Solana. Wow. What do you think they're going to do with that data at some point?
Wow, they're going to monetize it for sure.
Exactly. So that's why I geek out, not so much on, the hype NFT that you can flip. Like, can you buy $100 NFT and flip it for hundreds of thousands? Absolutely. I have friends who do that all day, but I don't have that kind of time. So I'd rather look at infrastructure, because at some point, just like all bubbles, it's not even, I wouldn't call it a bubble. It's a boom and bust cycle. All
Yeah.
sectors have boom and bust cycles. Gold
Yeah.
goes through it, real estate goes through it, tech
Yep.
is going to go through it, crypto is purely tech,
That's
and
right.
crypto
Okay.
will have its bust cycle. And when it does, at the end of the day, the companies that are mission critical will survive, thrive, capture a lot of market share. And then the next iteration of crypto or blockchain based companies, they'll learn the lessons the old ones didn't, and then they'll innovate. And that's why we have an app for everything now. I mean, think
Yeah.
of a thing you need an app for. There's somebody who created for that.
Yeah, for sure. Well, that's a great way to look at it, because we now have enough history, really, just even with technology and digital, aspects of our lives. They do go through cycles, and then we have people like Ray Dalio who write tons about these economic cycles, and then he goes back hundreds of years and goes, "Y'all, this is just another thing. So just know we're going to go through something else." And you're viewing it from that viewpoint too, and so you're looking at some of those foundational, and I guess these stronger blockchains like an Ethereum, people built on top of the Ethereum blockchain.
Yes.
And so that's why it becomes a foundation, not only its coin for investment, but actually the smart contracting people build on top of it safely too, right?
Yes. And that's a level of that's like a network effect that you just can't easily unwrap and undo.
That's true.
And unfortunately, though, a lot of the hacks, they happen on Ethereum's network. The coding language that's used has a lot of attack vectors. And so some of these other competing blockchains, which they call them Ethereum killers, like Solana and Luna, Cardano, Ripple, there's a lot of other ones that are out there.
Yeah.
Avalanche is, another one where they're saying we have our coding language is more secure. So that way, ideally, the hacks will decrease. And our transactions are faster, because they're also realizing. So this is one big money experiment. Because Vitalik came out, and at the end of the day, it's until the real world starts using it do you find where the weaknesses are.
True.
And what they found is that when it comes to high volume transactions, Bitcoin Ethereum's network slows way down, and the only way to push something through is to pay $200 to $300. Well, if you're only moving $50. Paying $200 to $300, it makes no sense. So now you're stuck. Or if you have rewards that you want to claim, and say, your rewards are, $1,000, but you're going to pay $500 in gas fees because you're trying to trade at noon in the middle of the day when everybody else is. And this is global.
Wow.
So there are so many issues that have shown up, especially in the last 2 years. The DeFi summer of 2020, I would say, brought to the surface the vulnerabilities and the frailty around scalability, something called interoperability. So now you have all of these, you have a lot of blockchains that are looking to pull liquidity from Ethereum onto their blockchain through something either called a bridge, a wormhole, something called the Ethereum virtual machine. They're trying to say, okay, Ethereum can't really scale as it stands now, but there's something called Ethereum 2.0.
Yep.
Ethereum 2 is being multi-phased out. And when the full phase, not the full phase, but when it will fully be released, time will tell. Like everyone was expecting this summer, the next phase this summer, probably not going to happen. I would say, this is really like maybe another 2-3 years out before Ethereum 2.0 is truly live.
Wow.
But Ethereum 2.0 is meant to handle up to 100,000 transactions per second. Now, what does that mean? I just threw out a whole bunch of terms and people are like, okay, what do I care that something's 100,000 transactions per second? Because this is all about money flow. So to give you some context, Visa's network, Visa not MasterCard, but Visa's network, that is estimated to handle up to 24,000 transactions per second.
Okay.
Bitcoin, Ethereum, Bitcoin's ranging around 7 transactions a second. Ethereum, 25 transactions a second. Ethereum 2 is meant to go up to 100,000. Whether or not that happens, we'll see. And so you can see if we're going to be trading crypto on a 24/7 global, it's available everywhere. You have to be in the thousands of transactions per second and not like 50.
Yeah. Okay. Well, so that's cool because we're early in some of this, this crypto technology, and a lot of it's got to change, right? And now we're learning it's got to improve, and so somebody
Yes.
will improve it. That's the thing; they will work on this, and people will attack those problems. That's how our economies work. So, well, what we've done is we've themed kind of every show that we've had you on. This is our third one, and I really want to get into the government, crypto, and accountants. And so, before we were talking about really what is crypto, and then some other things, but we really want to talk about the government and accountants, and try to learn a little bit from you. What are those things that are happening? So, just generally, what are you seeing government's perspectives on crypto? Some of them are trying to lock it down. Some love it. What is the world doing from a government perspective around crypto? I know that's a big question. What do you think?
Yeah, it is, and I'll break it down. So, one, it's one of those. It depends. It truly varies. So you have countries like China and India that for the past several years they have been unstable in their decisions and their enforcement around being, crypto. First it's allowed, then it's illegal, then it's allowed again, but it's heavily taxed, and it's banned, then it's allowed again, but there's a bunch of draconian rules around it, and then it's completely banned.
Yeah.
Then, and then it's clear that, countries like Algeria, China, Egypt, Iraq, Nepal, and many others, right? They have not found a way really to control crypto for their own purposes. This is a disruption to money. At its core, it's really about control, power, and freedom, right? And that was clearly outlined in the Bitcoin white paper. And then you have like 42 other countries, like the Maldives, Zimbabwe, Vietnam, and they have, I would say, implicitly banned crypto. So that means that their governments either don't allow financial institutions to take crypto companies or holders as clients, or they prohibit crypto exchanges from even operating, amongst some, other restrictions. Now, using that as context, let's contrast that, right, to countries like Portugal, for instance. Portugal, the authorities have actually taken a very soft stance towards crypto investments. Here's the cool thing. I mean, I'm considering moving to Portugal. Individuals who gain profits from the sale and purchase of crypto, they're not taxed on their capital gains. And if you'd like to, exchange your crypto for a different currency like fiat, you won't be taxed either. Germany, I know. So I was like, whoa, Portugal, maybe I should visit.
That's got to be a nice place.
That's very nice, right?
Nice.
And then you have Germany. So Germany's decided not to treat digital currencies as legal tender, but Germany treats it as private money. So regardless of the value, if you have crypto, you won't be taxed, assuming you hold it for at least 18 months. So Germany has found a balance to say, okay, we don't want people heavily trading and absolutely bypassing capital gains. But if you hold it for 18 months, I think 18 months is absolutely draconian. Because in crypto, this thing trades 24/7. Like, okay, give us 7 days. If you hold it for 7 days, we won't tax you.
Yeah. Well, and 18 months is really, that's fiat money type ruling placed upon something that is so up and down second to second. And the U.S., they've also made some commitments toward what they think about. Like, of course, they tax the gains of crypto, right? And so, they've kind of made that. Is it similar to just other capital gains stock investment? They kind of tax it in the same way?
Pretty much. Yep, same way. As far as we know, that the whole hold it for a year and a day in order to decrease your capital gains exposure. But at the end of the day, between, crypto being treated, whether it's property, whether it's treated very similar to cash or as a security, at the end of the day, there are already rules and regulations if you apply the same, it's an asset class. And so if you apply the same rules around assets, then that's what crypto is subject to right now.
Yeah. Well, okay. So I looked up some, some government related, articles in Bolivia did try to like stamp it out, like a lot of countries that you mentioned. They tried to, I guess, outlaw DeFi currencies, or if they can't do that. And is that possible? Can a government actually do that? Like, by definition,
they try. I think it's the difference between stating it and actually enforcing it. And
Okay.
so, for those who don't know, the Bolivia backstory is that a Bolivian blockchain engineer, he
Ah.
had all his bank accounts shut down and his credit card taken away because the banks received a directive from the Bolivian central bank to say, and this is back in like 2014, that they prohibit all virtual currencies, and anyone who received money from crypto exchanges, your money, your bank account was frozen essentially.
Oh my
So
gosh.
cut off completely just because you received some money in the past. Or you can look at what happened in Canada this, a couple months ago, right? The truck drivers that were
Yeah.
protesting near the end of January and the whole international
Yeah.
travel restrictions imposed by the Canadian government. Well, at the end of the day, the Canadian, the Royal Canadian Mounted Police,
Yeah.
they ordered all regulated financial firms to cease from facilitating transactions from over 34 crypto wallets. Why? Because those wallets help to fund or support the trucker-led protests in that country. And so here's the moral of those two stories. Anytime that basically anyone at any time can be financially censored for whatever hot topic reason, right? Pick a reason.
Right.
It's not like pro or con. And so this is one of those, this is a bigger one of those like you're free to think you're free discussions. And it's why the Bitcoin white paper talks about blockchain money being censorship resistant, free to flow. So that way, if you're on the wrong side of a political movement, you can't be financially censored. And that crypto has brought that to light amongst all the social unrest that exists around the world. Technology has brought this conversation to the forefront. And only time will tell, like, which governments actually find a workable balance, and then which prefer to use draconian policies to basically crush innovation to the detriment of their citizens.
Yeah, but of course, the positive side of this is third world countries that have, blowing up inflation, where their money, their fiat money means nothing. They actually get to exchange things and perform goods and services really internationally now, whereas they may be restricted by their own government's currency. And so hopefully it can open up means of exchange for a lot of people that just are controlled by their country, or a lot of third world countries are corrupt, and they don't allow people to do what they need to do. So maybe, I guess, this is going to open up people's abilities to live and have free trade and commerce, or that's our hope, I guess, right?
That's the hope. That's the vision. This is definitely a war. It's just not with, bombs and weapons of mass destruction.
Right.
It's with money. So it's a little softer, at least, right? It's a softer war.
That's right. Yeah. Softer war for sure.
And you bring up a good point about inflation. So for instance, the best country to look at for that is Venezuela. With, Venezuela, the price of a cup of coffee went up. I read a report 700% in 6 months. Imagine your $5 Starbucks coffee going up 700% because your local currency is completely devalued and it's being inflated like crazy.
Gosh, yeah.
We couldn't handle that. There's no way. We're already having like freakouts over 20% inflation based on just everyday goods we're trying to buy. 700%, and that's been the norm for years in Venezuela.
God, that is so difficult. And so hopefully a currency or something like crypto starts to bypass some of the craziness of inflation of a fiat, money in these countries. And so maybe Venezuelans can work for people in other countries and get paid through crypto and avoid a lot of that. Maybe. I don't know how it's going to work, but that's the hope.
It really is I would say it's a bit of an individual revolution. You can go to Amazon. There are so many books on individual sovereignty.
Yeah.
And the idea is that, we become borderless. So it doesn't really matter what country, or at least the vision is, or the utopia is that it doesn't matter what country you're in. You can live anywhere, work anywhere, play anywhere, earn anywhere. And at the end of the day, the way crypto is moving, I've read quite a few theses along the lines of the countries that are the friendliest, especially towards crypto, towards what I like to call Wi-Fi money. they're going to attract the best talent. And so you have, like, for instance, you have countries like Singapore. Singapore is a huge tech hub in Southeast Asia, and crypto is monitored, right? Because they do want to prevent, illegal activities and laundering. But they have found ways, and they're currently developing ways to balance legal crypto businesses, a legal crypto lifestyle, and regulations. You have, other countries like Sweden. So Sweden's central bank, they're testing the launch of something called the e-Corona. Now, here's the interesting. Sweden kind of gets it, because right now, nearly everyone in Sweden, like almost no one in Sweden, uses cash anymore. They use a mobile payment app called Swish. And it's been estimated in Sweden that by 2023, next year, retailers will stop accepting cash outright.
Wow.
I'd say probably 2023 or 2025 is probably a more realistic.
Wow.
That's Sweden. And so they're saying, okay, our country's already digital. So how about we have an e-Corona instead of a physical one? Now, the thing is that every, central bank is concerned about is, one, they fear that, the payment sector or the payment infrastructure is going to be completely left to the private sector. So right now, our financial infrastructure is held by governments, right? And different organizational bodies. But what happens when the monetary system is controlled by private companies like Facebook? Right? I can't
even think down that road. It's like, So you're saying the Swedish government may move away from printing the Corona or creating this coin, because the government is even saying we're just not going to use fiat money at all. We're almost there anyway. Hey, the Thrivecast is now on the Earmark CPE platform. So you can get free CPE just by listening to the Thrivecast and answering a few questions every single month. So find the Thrivecast on the Earmark app now. Thanks.
Yeah. They're like, we're almost there anyway. So why print paper when people are already utilizing mobile payments as a normal every day? And then, when you have a centralized bank currency, then there's also data that governments can track in a way that they could never do before. You can't do it with this is why we call it like under the table, paying someone under the table, because there's no traceability. But when it comes to then sending money via e-Corona, there's always traceability. And so that opens up. So there's a double-edged sword, right? It's not like crypto's pure freedom, because whoever controls the data or can look into the data, which is like, companies like the Graph that I mentioned before, right? They plan on tracking all of this data. And what happens when a central bank goes and decides, hey, we want to use the Graph's technology to help track the data of how our citizens are spending their money? Like, this is, it really is an interesting conversation between the privatization of money and the current financial system that is not as private as we'd all like to think.
That's right. Because now it sounds like you're saying crypto is going to be even more trackable and traceable 100% of the time, right? So now laundering that is going to be even more difficult than it's ever been, which may be good from a criminal perspective, right? But now when you could do some simple things under the table, that's like not going to be possible anymore, which is wild.
And I actually read a report that if and when that happens, the criminal underworld may actually want to go back to cash. So
this is,
I read that. I was like, it's an interesting, because there was at one point, like, the early days of crypto where coins, what was it? I believe it was Dogecoin was being utilized a lot in the, I guess you could say, the illicit activities, or the dark web underground, because nobody was paying attention to that coin. Well, now everyone's trying to, trade their favorite meme coin. And so it's like, you got to find a new coin. And it was to there are billions of Dogecoin that no one was paying attention to. Wow. So it'll be interesting to see. But at the end of the day, it's humans and money. And if someone wants to thwart the system somehow, they'll find a way. People always do. Yeah,
they're going to try. Well, they're going to try at least. What is the, what's the goal of these governments if they're trying to regulate? Now, I know you can't say it, because every government has a different perspective, but maybe for the U.S. or China, if they want to regulate, what are they wanting to do? Do they want some money, or do they want to tax it, or do they want to control their citizens? What is their end goal to seek regulation of crypto? Do you have thoughts on that?
It's one of those. It's one of those A, B, C, D, all of the above.
Right. Okay. Right.
It's all of the above. I mean, one, yes, taxes, absolutely. The money printing has been astronomical since 2020.
Yeah,
somebody has
sure.
to pay all those trillions back at some point.
That's right.
So
yeah.
definitely from a tax standpoint. There is, I would say, there are those who are genuinely concerned from a safety standpoint as far as protecting consumers from being in scam projects. I mean, there are very smart traders and investors in crypto who have fallen victim to scam projects, and they're intelligent. They've done all the right things, and they still missed some key indicators that could basically did scam them out of their money. And so there should be, there definitely should be consumer protections. Like I said, there are countries, like Singapore, Germany, Sweden, that are finding a balance. And so, this is all, like I said, we are all learning as we go. Yeah. Like, it's not let's test this in a safe environment for 20 years and then release it on the public. It's Satoshi just released it, said have at it.
Good luck.
And here we are. Here we are 13 years later, like, oh, wait, what happened?
This is the thing, right? So we got to deal with this. So, yeah. Well, is the U.S. government... go ahead.
Go ahead. No,
well,
go ahead.
Is in the U.S. government, is it the SEC that's starting to get involved, or is the U.S. Passing laws about this now? Or they're starting to talk about it now, or?
I would say it's all of them. The SEC, the the CFTC, every major organization in the financial sector is talking about it. It's on their priority list. Now, what's interesting is that there are already federal statutes that exist around assets. And so I was actually reading an article that was positioning this whole regulation as, look, the existing federal statutes already exist. So maybe instead of trying to change the existing statutes, maybe it's about filling in the statutory gaps, because this is a new asset class. Like, what gaps need to get filled in, and which laws do not apply, because not so much laws, but which policies or best practices no longer apply, because this asset class behaves very differently or different than a stock, bond, or commodity.
For sure.
And so I think that's the conversation. I think that is the conversation that they're having. Yeah. I mean, the IRS already has made it clear, okay, look, file your taxes because there's capital gains or losses, track that as any asset. But what it actually means, like, for instance, there's no wash rule in crypto. So I can basically, make a trade at a loss and then buy it back within a couple of hours and keep moving. But that's how fast the market is. So the whole wait 30 days until you can qualify to, it doesn't make sense for that. And so I think this is where there's going to be some carving out, I guess you could say, of, okay, for this asset class, this is how it behaves. So we're going to make these accommodations or these policies for it.
Okay, which is kind of how they've done, these capital assets, these securities. There's long term, there's short term. They're carving out some of those rules for crypto. They're going to have to start to do that also. But for now, the U.S. has called it. It is a security. It is considered an asset, right? And so they're like, if there are gains and losses, we're going to want to see those on your tax return. So I think that's kind of a given.
But it also, coins are different. So, like, we've seen, with the IRS, right? They're calling, Bitcoin is property. The SEC, Gary Gensler talks about some of these coins are property, others are actually securities, depending on how they were issued and released. Others are like artwork, right? So what's the difference between having a Van Gogh on your wall and a Bored Apes Yacht Club on your phone? They're both art. One's digital, one's print. Like, how being able to say all crypto falls under the same rules, it's different. Yeah. So.
And
I think that's some of the murkiness. And I've even seen some tax strategists talk about there's some laws where even crypto is seen as cash, and so how do you treat cash? So it's murky. It's not 100% clear, because
Yeah.
if you get granular into what does this coin do, how was it released, how does the investor or trader actually interact with it, how is money made?
Yeah.
It's not clear, and that's
Yeah,
where we're at.
It's tough. Well, okay, so let's step in kind of to the world of the accountant and the tax expert. What things should they be doing? Like, should they be taking crypto? Should they be studying crypto courses? There's crypto tax courses. I mean, you give a lot of those courses on CPA Academy. So what is your advice to accountants? What should they be beefing up on and practicing themselves right now?
Absolutely.
A bunch.
I mean, if there's a bunch, you have a lot. So yes, go to CPA Academy, and definitely check out there's free and paid crypto courses. Like, I give a free crypto 101, so that way you can get that high level macro view of here is what your clients are doing personally and professionally. Because I'd say the accountant who wants to ignore this, here's the thing: your crypto clients, they usually start where they're just buying crypto for themselves personally.
Yeah.
Then the deeper you go down this rabbit hole, what you discover is what I call the 3 Ps: payments, payroll, and perks. What happens when the business owner decides, hey, I'm going to flip on the switch that says that Square or Cash App or Shopify or Stripe now allows me to accept Bitcoin?
Right.
Chances are they're not going to have a conversation with the accountant first. Chances are they're going to turn on that switch. Yes, I want to accept Bitcoin for payments. I want to pay vendors who will accept Bitcoin. And then what? Now they come to you and say, oh, by the way, I've been accepting half of our invoices in Bitcoin. Can you help me figure this out?
Oh, yeah.
So it's about being proactive, right? You're going to be like, well, go to my competitor down the street.
Yeah, right.
Maybe they can help you.
Yeah.
So
well, and you're saying that that's a competitive
Mm-hmm.
advantage for us as the accounting firm onlys to go, this is going to happen. Your clients are going to show up not having told you, and you are going to have to figure it out. And there's not a lot of accountants who have figured out how to help and consult with their clients on managing these transactions in crypto. So we have to learn how to help them.
And one of the ways, here's the thing, I would say it's not as difficult as it seems. It does not mean you have to become a subject matter expert in all things blockchain.
Good.
What it does mean is you need to understand what's going on. So take those crypto 101 classes, get your CE credits, definitely take the crypto tax classes for sure, or courses, so that way you can understand at least high level some of the surface level tax implications, because there's definitely more complex levels to it that's even outside of my wheelhouse. I mean, when you get into conversations around indefinite intangibles, even that goes over my head, because indefinite intangibles applies if you're holding, Bitcoin as treasury. You're falling now into that indefinite intangible zone. And even I'm like,
I don't
CPA,
know.
you handle that.
Okay. Well, I'm going to have to go read about that. Yeah.
Right. And so what a CPA can do is there are companies that are developing software to help track and manage this. NIDIG is a company that's out there. I forgot. There was another one. I can't think of the name right now. But there are companies who are saying, hey, we are building out accounting-based software that will allow you to be able to integrate, track it, whether it's an invoice, whether it's payroll, whether it's perks to your clients. However, because, some companies may start giving Bitcoin back rewards instead of points and cash. Wow. And so if you're doing Bitcoin back reward, who's tracking that cost basis and what you gave it to them at, and what is, how do you classify that? And so definitely search. I would, do a Google search of crypto and accounting software, just those two, 3 words. And that will bring up a lot of companies that you can start to then deep dive into, set up some calls with, understand what they're doing. So that way you could at least start to vet who you are going to utilize, partner with, what resources do they have. So that way you can say, okay, when my clients come to me with, hey, I'm now accepting, Bitcoin at the checkout at my checkout page, you'll be at least ready to say, okay, I know who to contact, or I know what buttons to turn on for my services. So that way I can say, we're good. Just here, go to this portal or sign up here, or let's schedule a call to have a consultation services. And here's what's really cool. You talk about the commoditization, and Jason, you would know this better than I would, but I'm pretty sure that there's been some level of commoditization of prices in the accounting industry.
Oh yeah.
So here's the thing: the way to get out of that is if you do advertise and let people know that, hey, I can help you with your crypto world, whether it's personal or business. You can charge a premium for a period of time, right? I would say that window is probably about 5 years. You have about 5 years to be able to say, I can be that crypto tax expert for you or that crypto accounting expert for you. And you can charge a massive premium, because after about 5 years, everyone's going to be doing it, and you go back to commoditized pricing. So from a market sales and marketing competitive advantage, if you were looking for how can I differentiate, this is one of the biggest differentiators out there right now, because we are scrambling, business owners and individuals, we are scrambling to find accountants and tax strategists who get it, and who are not trying to convince us like, well, they're a risk. Yeah, we knew that when we got in several years ago. We already knew that. We've already lost money, made money, lost money, made money, and we're still in it. So don't talk to us about the risk. We know that. We just want to know, how do I maximize my wealth, minimize my taxes? How do I stay compliant? That's what we want to know.
Yeah, for sure. Well, and it's funny, and I know a lot of firms probably ran into this too, but this year more than any other, our individual tax clients are like, oh yeah, I got about 50 G's in gains on crypto. We're like, what? Of course, but right now, like you said, they're all individually doing their own investments to play around. There's no businesses yet that are taking this money on our client roster, but it is happening. They're coming going, you're going to have to tell me how to do this. And we're making our own policies, going, we cannot track all of those many ins and outs. So you have to have a piece of software that produces those statements of gain and loss. And I'm sure a lot of other firms are doing the same. We can't do so many, because they're all buying and selling like crazy. They're trying to win the market and get their Lambo, as you say, and so they want us to track it. So right now, accountants really need to be, figuring out how to just track it. But you're right. If we said we can help you transact business in it and work through the complexity of that, that's going to shoot us ahead of a market. But we've only got a few years, right? Because even, now, a lot of firms are coming out of the woodwork going, we are crypto experts. That is happening over and over now. So it's already starting. People are stepping up on that market. And so at a baseline, we have to figure those things out. So which is crazy.
And one of the things, that's one of the projects I'm working on at Alt Money is to create that checklist for accountants. Like, here, start with this, because there's so much. And my heart is to help accountants, because at the end of the day, like, accountants are a part of the lifeblood of truly profitable, successful company. And a lot of people don't give you guys enough credit where credit is due.
That's sweet.
Do. I absolutely do. And so it's like, okay, help the accountants, and you help everyone in their network.
That's right.
Interact more, I would say, from a compliance side, interact within the right rules and regulations, but also from a strategy side. And this is the other thing. It's not also from a competitive market advantage standpoint. It's not also about accountants who are raising their hand saying, hey, I do crypto. There are tech companies who are developing software very TurboTax style that are open. They're going directly to consumers and say, you don't even need your accountant to handle the tracking of that. We've already coded software that you connect your wallet, and we'll show you all the tax loss harvesting. We'll manage it for you. And so just know that your competitor is both software, right? Something intangible, and it's also human. And so I look at it that way as well. Like, the financial advisors, they went through that when all the robo advisors came out, right? You got these robo platforms, and they were going to take over the world, and that didn't happen like they thought it would. But then you have companies like Robinhood that's come up. And a lot of these companies, Square, Cash App, PayPal, Venmo, Zelle. What's that all about? That's all about self-sovereign. I wouldn't say self-sovereign. I would say you are individually controlling your money in a way that goes beyond a bank, a checking and a savings account.
Right.
You're being able to buy assets, trade them for yourself based on whatever your hobbies are, based on whatever your wealth goals are. And so this is definitely, it's a weird time because we also live in a very high entitlement society.
Yeah.
So you have people who want to be like, I want to make all the money, but then they make a mistake but I want to blame you if I make a mistake. Or I want to push the responsibility. And so it's also that weird zone that we're in. But for those of us who are mature, we're approaching it from I'm taking the responsibility to earn it. I'm taking the responsibility to lose it.
That's cool. Well, we're mature on this show, so we're going to take our responsibility, but we want to invest in it. So, as Sonia, as we wrap up, one final question is I want to tie in kind of the Fed and what it's doing. Just macroeconomically, I want to watch Chairman Jay Powell kind of see what they're thinking, and they're starting to raise interest rates. They've been doing this, since the 70s or whenever the Fed was created. They're trying to control inflation through their rates, and they're concerned about unemployment. So what does that activity have to do with crypto, or does it affect crypto at all, what the Fed is doing? Because the Fed is directly monetary policy, and it is U.S.-based monetary policy, and other, international monetary policy government bodies. Does that have anything to do with crypto, what the Fed is doing?
Interesting enough, of all the central or Federal Reserve, like the U.S. Fed definitely has an impact on crypto. I would say the narrative has an impact, but whether or not that's actually backed by the data. So especially back in November, it was, oh my gosh, Fed's raising interest rates, the market's going to crash. Yeah. It's over. We're going into crypto winter for 5 years. It was absolute doom and gloom. Yeah. And so a lot of us was like, okay, let's look at the data, because there's that fear-based narrative, but does the data actually support that? And so since Bitcoin's only been around since 2008, we don't necessarily have a lot of history, but what we do have history with is what's Bitcoin's counterpart. Well, right now, that's the NASDAQ composite. It contains about 52% of tech stocks, right? It consists about 52% of tech stocks. So if you look at that as a comparison tech, because crypto is purely tech. So if you look at the NASDAQ composite as a tech index, and if you go back to September of 2007, so you have September of 2007 to December of 2008, and the federal interest rates dropped from about 5.25% to down to like 0.1% in that essentially 1 year time frame. Yeah. Now, during that time, the NASDAQ also fell. Now, people can say, oh, it was 2008, the housing crash. Well, but at the end of the day, take away the catastrophic event and just look at Fed interest rate and what was going on in the market. Fed interest rate dropped, and so did the market. It wasn't until about December of 2015 did interest rates raise from that floor to around 2.5% January 2020. Yeah. And during that time, 2015 to 2020, with the interest rate growing, that time the NASDAQ grew over 80%. So we at least have 15 years of historical data to show that the tech sector, as seen in the NASDAQ composite, actually becomes very bullish in rising interest rate environments. In crypto, it's pure tech. And so here's the thing, though. We are expecting, like I said earlier, a multi-month downtrend at some point this year. That is coming. But at the end of the day, we look at how is historically the tech sector responded to rising interest rates, and it has always been bullish, or at least not say always, at least for the past 15 years, it's been bullish. And so that's the data we're going off of. Okay. Well, that's interesting. So you're saying it's not a direct relation, but we can tie activities of the Fed to other markets like the composite. And so tech is the same. And so you're anticipating it's going to follow those rates going up over time. It's going to, it's going to still bump its way, and it's going to freak us out if we have any crypto. Right. But that's just the way. That's just the way our crypto ride is going to be for quite a while. So there's nothing we can do about that. And here's the thing: a lot of people also don't know that Bitcoin has lost a lot of its volatility. So go circa 2017, 2018. I say circa like that was like eons ago, but in crypto, that's like 100 years ago in 2018.
Yeah.
Bitcoin would have these 80 to 90% drops. Now it's it's especially during the pandemic, 50%. Now, at the end of the day, that's so essentially 40% of that volatility was wiped out during the last 4 years.
Wow.
And so just knowing that over time, especially Bitcoin's volatility, it's going to decrease.
Yeah.
And at some point it'll plateau. And then it's like, these little 1% to 2% moves a year. At least that's where I think it's going to go. But this is a part of the price discovery. Bitcoin has in no way plateaued at all.
Okay.
It is still in its formation. It's still growing. And then all the altcoins like Ethereum,
yep.
They're growing as well. So we've yet to see a plateau. I say, hey, let's all circle back in 5 to 10 years.
Yeah.
But really, I'm looking at the next 36 months, really the 3-year horizon. But just so everyone knows, crypto does change really quarterly. It has a seasonality and cycles to it. And so it's growth period. One of the things I've witnessed, it's short and it's tight and it's violently fast and explosive and amazing. Okay. And then when that tiny window is over, the downtrend is brutal, painful, and bloody. And here's one of the things, being in crypto, knowing that one of the things I've seen consistently is that the exchanges, especially those that allow for leverage trading, they make more money liquidating longs, so a downtrend market, than they do liquidating shorts. And so just know that it's actually profitable for Bitcoin to have some wild thrusts, wild uptrends. So that way the downtrend is actually more profitable. So just know that there are games being played. These are money games at a level that I don't think we've ever seen before.
Man, that's amazing. So maybe the next 36 months is going to be something we may want to be in some crypto, right? It's going to probably go up during that period. As volatile as it is, it's going to trend upward.
So one of my favorite, I would say, macro trend forecasters I like to follow is Andrew Pancholi, and I did a interview with him. You could check it out on Alt Money.
Nice.
But one of the things he talks about that I'm very fascinated with, and I found to be true, is presidential cycles.
Wow.
And so what he has actually found is that during I believe it's. Oh my gosh, I'm blanking right now, but I want to say it's pre-election year. So midterms, markets are flat and they don't really do much.
Yeah.
But when it comes to, pre-election years have, going back well over 100 years, has been the strongest for all financial markets.
Wow.
And so we're approaching into guess what? Pre-election year.
Man. Okay. I want to get in.
It's happening, right? And so it's like all assets grow, but this is what's interesting is, but then are these assets growing in a rising interest rate environment? Yes. Oh, that's the point.
Oh, they are. Yeah.
Yes.
Okay. That's right. You said they were.
Yes.
Yeah.
And so time will tell, but these cycles, I like to, like I said, look at some of the macro, because yes, the macroeconomic environment, especially on a global level, because crypto is global, it is important to pay attention to. And because at the end of the day, it's all about money flow.
Yeah.
And recognizing, so just to give one last piece of context, so the top 10 banks in the world, I did a graph about this, where top 10 banks in the world is worth about $2 trillion. What's crypto worth right now? Somewhere between 1.8 and $2 trillion. So you got Wells Fargo, who has these commercials. We've been around for hundreds of years, right? And they're in this $2 trillion group. Crypto, Bitcoin's come around and says, hey, I've been around for 13 years and I'm already 2 trillion. BlackRock, I saw an article, BlackRock recently cleared $10 trillion in assets under management. So if crypto follows BlackRock's path, we're only 20% of the way there.
Wow.
We still have at least another 80% of growth, assuming that Bitcoin or crypto as a whole becomes a $10 trillion market.
Yeah.
I've seen estimates where crypto is going to be somewhere around a $17 to $20 trillion market. We'll see, but there's more upside than there is downside, because I look at it as, if this wasn't a thing, all global governments could have squashed this,
Yeah,
like
right.
2018, especially 2017 to 18 when it had that 90% drop. They could have squashed this and we wouldn't even be having this conversation.
Yeah.
But no one did. In fact, more companies, you have companies who are investing in MIT's program, giving grants to MIT to develop either a centralized digital currency or private in-house blockchain. So colleges are being funded to say, build out our blockchain network, whether it's a government in the financial institutions or it's a private company. So this isn't going anywhere ever.
Okay.
This is like the next level.
So everybody invest, right? If you're on the Thrivecast, so
get educated so you can understand what you're getting into. It's no different than buying penny stocks or junk bonds. You can make millions. There have been plenty of guys in history who've made millions off of junk bonds, but they knew what they were doing.
Yeah,
I don't touch junk bonds. I wouldn't know what.
No, well, the cool thing about you, Sonia, every time we talk about investment, you're like, get your education. So as we close out, tell people how you do that at Alt Money. I mean, and how, where people can find some of your information to get educated.
Absolutely. So at Alt Money, one of the things we like to focus on is the bigger trend, because the barrier is I don't know where this price is heading. So for me, even to put money on the line feels scary. And our goal is to simplify. Okay, let's look at where this trend is going. So that way that gives you a bit of confidence to be able to put together whatever your money strategy is going to be around crypto. Yeah. And then over at CPA Academy, that's just the platform that you'll see me on a lot, where I actually teach basic classes. How do you set up a wallet and exchange? How do you actually do research to find these infrastructure mission critical projects? Because that's what my passion is, about finding those gems. Yeah. And then how do you understand the big picture? And so there are courses that, my courses are fun, by the way. Yeah. If you're looking for boring courses, go elsewhere. But I like to keep it enjoyable, right? Keep it enjoyable. I like to relate it to what you already know. And so, yes, there's a lot of terminology that sounds like something foreign, but at Alt Money, we're all about looking at the bigger trend that's happening, especially at starting with the personal level, but it's really the business level. That is where a lot of money is going to be made. One thing that I tell my crypto students is that the name of the game is fees. Whoever has the most users, whoever has the most adoption will make the most fees, to the tune of, I'm pretty convinced we're going to see trillionaires in our lifetime because of how fast this money will move and be earned.
Wow. That is amazing. Well, cool. Well, thank you everybody for listening to the show, and go check out Alt Money, Sonia Dumas, and all the things that she has to teach us. We're going to have one more show with her coming up after this one. So thanks for joining us. Thanks so much, Sonia, for being with us on the Thrivecast. We appreciate it.
Thank you, Jason.